What if I told you that in 2026 your credit score could swing by 20 points or more? Not because you missed a payment, but because of two new scoring models that are about to change everything? The FICO Spring 2026 report just dropped, and the average score dipped to 714. That's just the beginning. Welcome back to Credit Unlocked. If you're planning to buy a home, get a car loan, or even just apply for a new credit card in 2026, you need to pay attention right now. The Federal Housing Finance Agency is rolling out FICO 10T and VantageScore 4.0 for mortgages starting next year. And these aren't just minor updates. They're a complete overhaul of how your creditworthiness is calculated. Let's start with FICO 10T. The T stands for trended data. Right now, your FICO score is like a snapshot. It looks at your credit report at one moment in time. But FICO 10T analyzes your behavior over the last 24 months. Are you paying down your balances consistently, or are you just making minimum payments? Are you applying for new credit every few months? This model tracks trends, not just points in time. Here's what that means in practice. Let's say you have a credit card with a $5,000 limit. Under current models, if you have a $2,000 balance one month and pay it down to $500 the next, your score might improve slightly. But with FICO 10T, if you consistently carry high balances and only make minimum payments, you'll be penalized more severely. Conversely, if you're steadily paying down debt, you could see a bigger boost. Now, VantageScore 4.0. This is the other major player, and it's taking a different approach. While FICO 10T focuses on payment trends, VantageScore 4.0 gives more weight to your rent and utility payments. Yes, you heard that right. Paying your rent on time could finally help your credit score, not just avoid eviction. But here's the catch. This only works if your landlord or utility company reports those payments. Many don't, so you might need to use a rent reporting service, which typically costs between $5 and $15 per month. Is it worth it? For many people, especially those with thin credit files, absolutely. This could be the difference between a 650 and a 700 score. So how will this affect your mortgage application in 2026? Mortgage lenders are required to use these new models starting next year. According to industry estimates, about 15% of borrowers will see their scores change by 20 points or more. Some will go up, some will go down. If you're on the borderline for a mortgage rate, say between a 690 and 710 score, this could mean thousands of dollars in interest over the life of your loan. What about credit cards and auto loans? While mortgages are the first to adopt these models, credit card issuers and auto lenders will likely follow within 12 to 24 months. So even if you're not buying a house next year, you need to prepare. The days of gaming your credit score by paying down balances right before applying are numbered. Here are 5 actionable steps to prepare for 2026. First, start paying down revolving balances consistently, not just when you're about to apply for credit. Second, consider using a rent reporting service if you're a renter with limited credit history. Third, avoid applying for multiple new credit accounts in a short period. These models penalize credit-seeking behavior more heavily. Fourth, check your credit reports now for errors. Dispute anything inaccurate, because with trended data, mistakes could hurt you for 2 years instead of just a few months. And fifth, monitor your credit regularly. You can't manage what you don't measure. Use free services like Credit Karma or your bank's credit monitoring tool. Remember that spring 2026 report I mentioned? The average score dropped to 714. That's down from 718 last year. Why? Because these new models are already influencing how lenders view risk. Don't wait until you're applying for a mortgage to find out where you stand. The time to act is now. So what's your biggest concern about these 2026 credit score changes? Are you worried your score might drop or excited it could go up? Let me know in the comments below. I read every single one, and if you found this helpful, hit that like button and subscribe for more credit insights every Tuesday.